Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Am here with the Bulletin Board Heroes here on Share Talk and sponsored by the UK Investor Show. That's on the 25th of April for those who would like to see it. Starting off with Audio Boom, where we're following on from the break of this triangle post, November triangle, top of the triangle there at £2.50. Good to see that we managed to do more of likely to close above it today. And that would then suggest that we're going to hit the top of a July rising trend channel as high as £3.80 over the next few weeks. Obviously, the stock is still in that post-February range of, let's say, 150 to 250 roughly, but everything here hinges on the break of that November resistance line at 250, which the stock seems to be finally quite comfortable with. Itaconics is next, a stock which did serve up a few attempted rallies over the past year, especially that one in January when it sort of spiked towards 8 pence. Not quite as exciting now, but looks as though with a bit of a delay we're following up on that falling wedge break in the middle of January. We've gapped up through the 50-day moving average at 1.47, which tends to be a decent signal in such situations, and at least while above that 50-day line, looking for a retest of the 2 pence area and the 200-day moving average around that level. That was obviously the December intraday peak. After that, we could be looking at a much more impressive recovery for the shares, possibly towards 3.5 pence, which implies that the shares are in a rising trend channel from the middle of last year. But let's see if the stock can get up to 2 pence in the first instance. Interesting to look at IQE, given that it's one of those stocks which keeps on being battered by the bears and the naysayers. Here we have had two different bullish developments. The first was the break of that post-December resistance at 54 pence earlier this month. That's now come in as support for the shares. We're also well above the 50-day moving average at 50 pence, which is an added bonus. But the latest development this week is really the break of that November resistance line, nominally around the 54 pence level. Above 54 pence, we could see the stock head back to attempt a retest of November resistance. And obviously then there's the top of a rising July trend channel heading as high as 85 pence. But given the history of the stock, one would be pretty keen to enforce a stop loss at least on the basis of the 50-day moving average. And if you don't want to risk that much, then back towards 53, 54 pence. Next situation is one which I know a lot of people are willing to go higher after the way that the pie in the face was royally delivered to the bulls in January. This stock requested just over the weekend, and what we're looking at now really is even though this base building and regrouping may take a while, a couple of points to note here, which I think I mentioned before. First one is that that low in June was 2.76 pence, so above that. Nominally we're in a bear trap rebound mode. The second is that we're in a triangle here from the early part of last month, top of the triangle there at 3.3 pence. So end of day close above 3.3, maybe 3.4 to give it a little bit more air, could then allow the shares to retest the post-January resistance at 4 pence and up towards the 50-day moving average and a rising trend channel from last month up to 4.65 pence. Adding to a 3.3 or 3.4 pence end of day close, you might want to see the RSI back above the neutral 50 level, as that would be a leading indicator on potential upside. Stop loss at the moment back below today's intraday low at 2.8, which obviously ties in with the June support area. Another difficult situation, which one would shy away from looking at not normally, but does look as though new oil and gas is making the right technical noises at the moment. The reason for saying that is the way that we've broken this wedge from October and the 50-day moving average at 0.05 pence. Above that combination, and we're looking for a potential retest, rather obvious retest of October resistance at 0.1 pence, maybe if we're lucky up to the area of the 200-day line, just shy of 0.12 pence, but clearly a very highly speculative stock, and one that's been particularly frustrating in the recent past. A new name, I think, for the Bulletin Board heroes comes in the form of Cerium Technologies. Here we have actually a breakout from a falling wedge, quite similar to New Oil and Gas, with that very thinly traded falling wedge from the beginning of November. Would be nice to see an end-of-day close above the 50-day moving average at 26 pence today. We've obviously traded higher earlier in the session, but come back. But end-of-day close today, or over, or an end-of-week close even above the 50-day line, could set the shares on a path towards that September resistance line projection through 45 pence over the next month or two. The obvious stop loss is just back below recent lows. Finishing off with something to cheer us up, a bit of a lap of honour here with Powerhouse Energy, covered for the first time in the middle of December around 0.35 with the break of that November resistance line. Then we bounced off old resistance for December around the 0.62 pence level to start February, and now we've actually hit the target that I think I delivered just a couple of days ago at the top of this rising trend channel from December at the 1.15 area zone. Perhaps we could stretch to 1.2 pence over the next day or two, but as you can see, at least for this run, Powerhouse Energy has done its job for the bulls. Now it'll be interesting to see whether we can hold the previous January resistance at 0.95 pence. That may be an area to buy dips into for those who are still keen on chasing the shares. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.